Hey, EPS, one of the most watched metrics by the investment community. Let us talk about EPS and perhaps more importantly, diluted EPS. So what is earnings per share? You can see there the basic EPS formula in the green boxes from this excerpt from your textbook, right? You are essentially taking net income less preferred dividends, and you are dividing that by the weighted average common shares outstanding. That gives you earnings per share. But what is this other thing called diluted EPS? You can see here the equation then continues. You are also going to subtract the EPS impact of dilutive options and warrants and the EPS impact of dilutive convertible securities. These numbers, as you see here in the little bullet there, right? This is one of the most obsessively watched figures published, watched by finance professionals. The trouble is that you really can't compare EPS against companies. Different companies, even within the same industry, it's nonsensical to compare earnings per share. Why? Because, well, the number of shares outstanding isn't proportional to income. And also, management controls the number of outstanding common shares for any number of other reasons, and there's no real relation between firm size and the level of common shares. And so just look at these three companies, this excerpt from the textbook, right? They're all in the same industry, right? And you can sort of see that their earnings per share are, well, they're very close, right? And so can't we just use that to sort of say, well, which company is better than another? But the difference there is that look at the vast difference in the number of shares outstanding. And also, hey, forget about EPS. Look at the difference in stock price for these three companies from 177, 366 to 162 approximately stock price at the end of 2022. And so EPS, while closely watched, and it does tell us some things, you can't really use it to compare different companies one to another. What it does do, though, you can see here, the reason why we mention not just earnings per share, but diluted earnings per share, is diluted earnings per share presumes the absolute most extreme case when we talk about the level of shares outstanding, that at the beginning of the year, every single option holder who has the ability to, in theory, exercise their options to obtain shares, and every single bit of debt instrument folks with a convertible option all exercise and convert them into stock. What is the absolute worst case of number of shares that might in theory be outstanding as your denominator, right? And that is why this dilutive effect reduces basic EPS to diluted earnings per share. You can see there from J&J's excerpt, right, in 2020, while basic net earnings per share would have been $5.59, the diluted version is 8 cents less. And then in 2021, it's 12 cents less. And then in 2022, it's 10 cents less. It will always be less because you're increasing the denominator of that equation to the worst possible, most extreme case of every share that could possibly be issued and outstanding. If everybody exercises their options, that's what that larger denominator ends up to be. What does that mean from an analysis point of view? First of all, a reminder, EPS is not comparable across firms, right? It is shaped by capital structure and therefore is not a absolutely 100% pure, pristine measure of performance. Diluted EPS is perhaps the more conservative way to look at shares, at the level of shares out there, because it's the true economic exposure of shareholders to dilution. And finally, the treasury stock method shows strategic flexibility. This is an actual example of treasury stock. Remember, we mentioned that a few decks ago as shadow currency in some ways, right? It shows this level of shadow currency at actual work. All right, so there are some analysis insights and techniques into this peek at shareholder equity and some of the things we need to be aware of when we look at financial statements. I hope this is all useful. This is module number 8, and we will see you in the next module.